Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They've also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Rule Radio. Here we sit in the middle of April watching the gold price, currently sitting just under $1,740, trying desperately to push out of this rising channel that we've been stuck in since the middle of March. Silver continues to climb, trying to take a stair step up after putting in an end of March low, now back up to about $25.50. Platinum, never taking the break that gold and silver had, continues to bounce up all the way from last fall, now pushing up to just under $1,200 and riding the rising lower end trend line. And palladium, after having a pretty substantial breakout move back in the middle of March, has now kicked up to just over $2,700. And all this potential metals turnaround, and in platinum's case, continued rise, comes coinciding with the Dow Jones now pushing up to about 34,000. So it looks like good days are ahead for anybody who has any investment anywhere. Does that sound right, Tori?
That absolutely sounds right. It's almost like the metal stability is great. To me, it's also an indication that the markets are trying to figure themselves out a little bit. These are uncharted waters in terms of stimulus, and the amount of activity in markets in general is unprecedented. We'll get into some of that later in the show, but all the talk on Wall Street and in Washington is bonds and interest rates and the yields and debt and equities and money printing and all of these things, infrastructure spending or stimulus. These terms have everything just sort of like a yo-yo on a string. And even the most intelligent, wise old sages that have been in economics for decades are having a tough time predicting where things will go. But we're going to put you on the spot, and let's break down the technical aspect of gold a little bit more. And your double bounce has held so far. What are you seeing the gold charts telling you?
Sure. So if you look at the lows put in gold back on around March 8th, and then they're on March 30th, and then three highs previous to that March 8th bottom we had end of February, then around March 16th, and here just a couple days ago, April 11th. You're building this pretty consistent rising channel in gold. Now, the way I look at charts, that doesn't necessarily tell us if we're in continuation down, which we have been for a couple months, or if we're going to have a pushback up. It looks like the bulls and the bears are fighting it out pretty even-handed. The bulls are showing a slight win, as that is a rising channel, but it's pretty dead even at this point. Short term, I would argue gold either needs to make a breakout move probably here within the next week, pushing above 1760 and going up and testing the 1800 mark. If we don't see that in the fairly near future, I'd actually expect to see us maybe go down and retest that bottom level one more time. Although touching the top end of this channel 3 times, touching the bottom end twice, it ain't going to stay here for very long. So I would expect to see some breakout one way or the other fairly shortly here. Now, my joke a second ago about all things looking wonderful, that comes on the back of one thing not looking so wonderful that you were just talking about, and that's what's the US dollar doing when we bring in the discussion of yield curves and interest rates and inflation rates and monetary spending from the US government. I think it makes sense as to why we're seeing pretty much everything starting to turn upwards, especially the Dow Jones Transports, which we were just talking about right before we started recording, up 24% in the last few months. It leads me to the same question that we've been asking for a long time. Is this legitimate growth, or is this driven exclusively by a decline in the dollar? And I would argue the latter, and if that's the case, I would definitely expect to see inflationary pressures continue to push gold and other metals upwards.
I would too. Common sense would tell you that that's the case, and you're starting to see it. Earlier in the year, we called for a CPI expectation of 3% at some point happening, and Jeffrey Gundlach pointed that out months ago as well, and that's something that we wonder, what are the markets going to do with that when it happens? Because it just about happened this month. It popped from 1.7% to 2.7%. So inflation is the reality, and it's going to worsen The CPI is drawn off of a 12-month rolling average in terms of those prices that everybody's absorbing and everything that they go to buy. And that's a 12-month rolling average. Well, why did it just pop from 1.7 to 2.7? It's because March of 2020, which was a very deflationary month due to COVID and the economic shutdown becoming a reality at its onset, that was a deflationary month. And so that was actually making the CPI look better. So now that we've absorbed 2021's March, we get this big pop. Same thing's going to happen in April and May, you guys, because those two were relatively deflationary months. So we're going to see 3% on the CPI. And Miles, with the Fed leading rates unchanged for the foreseeable future, they're trying desperately to keep that short-term lending rate at zero. Well, what also is happening is the producer price index is up 1% in March. And that was a surprise. That they thought was going to be about 0.4%. February was 0.5, so it doubled February's increase. And those are the highest levels since 2008 that the producer price index is. And then finally, the final demand index is up 4.2%. So everything is telling us that PPI at the highest level since 2008, everything's telling you there's still a ton of market uncertainty and unpredictability and risk to me. And what inflation does to your portfolio is devastating when you're sitting in cash. And with what the dollar rally has been, had it not been for those fundamentals and people sensing it, I think that we would see a much lower gold price. We probably wouldn't have held on that second bounce. And I'm not trying to be predictive, but with transports telling that story like you allude to, up 24%, the transports index is outperforming every other index. And that should bode well from a global economy standpoint, like a turnaround. But unfortunately, there's so many US dollars and other currencies in the market that when the economy really starts to get hot, that's when the impacts of the sheer magnitude of, regardless of the currency, dollars in the system starts to take root. And that's when I think that that'll be very, very strong for the gold price. Well, before we leave the dollar, can the dollar rally and bond rates climb further? Can the equities keep going? How can you predict? Because this could go on for a while.
In a long-term declining dollar, it's eat, drink, and be merry, right? Like, what other option do you have at that point? There's no incentive whatsoever to buy treasury bills. There's no incentive whatsoever to save. It's the only thing that's keeping our economy afloat is the velocity of money turnover, not what you would traditionally consider to be growth, but the speed at which we're turning money over. And you can't turn money over that's sitting in a CD for 18 months.
Such a great point. You're talking about the velocity.
Right.
And that is people starting to get trust in investing or purchasing, borrowing, whatever. But investors are borrowing like mad against even their retirement portfolios. The fastest rate since 2007. And the last 5 months, more money has flooded into the stock market than in the previous 12 years combined. So that's something that should cause the hairs on your arms to raise, right? That is so much money that really speaks almost to a melt up.
Well, and in the last 12 months, the dollar index has been down as much as 13.5% from March of last year. So it's all tied together around the loss of faith in the US dollar. And that's why when you look at the commodity sector in general, including a lot of the industrial metals, you're seeing continued rise even though gold is falling. Now, silver did come down with gold, but silver has remained looking bullish, which is something we've been saying for the last number of weeks on this show. Despite the fall in silver, if you look at the longer timeline, silver continues to look bullish. Platinum has continued to look bullish. Palladium has continued to look bullish, including metals we don't deal in, like rhodium. Everything is continuing to look bullish, and I'm paying more money at the gas pump than I did 6 months ago. And that's with the dollar taking a little dead cat bounce rise since January 5th. So we're looking at a decline in the value of the US dollar because there's no safe return to be made there when interest rates are near zero. On top of that, the dollar index is a basket of currencies that's compared to other currencies worldwide. And if you look at a chart that Bloomberg put together a couple weeks ago, the dollar share of global reserves has declined to a 25-year low. So we're looking at the US dollar making up about 60% of all currency reserves globally. When you go back 20 years before that, it was some 85%. in the late 70s, early 80s. And we haven't topped higher than around 70% since around 1995. So the dollar standing as the global reserve currency, while still making up the largest percentage of that basket, has been dramatically declining internationally, and the value of the US dollar is dramatically declining here domestically. And yet we still continue to solve all our problems with the only tool that the Federal Reserve has at their disposal, and that's additional inflation.
And that's why you buy gold. People ask, oh, what's the price going to do? As a good client of mine, Mark, said today, I don't care. He doesn't care because he's not going to sell it if it goes to 3,000. It's a store of value. It's your savings. You shouldn't be saving in a currency that we see having this negative trend occur from a global reserve standpoint, negative purchasing power trend. As it loses purchasing power, it literally is robbing from you in stealth fashion just while sitting in your bank account or safely sitting in the safe at home. It doesn't matter. And gold price, I mean, I love to talk about this on this show. And you're right, silver's hanging in there. The ratio is back down to 68 to 1. Still hopeful that we're going to see that outperform further like it did in 2020. And let's get that ratio down below 60, and keep that trend going as well. But that also is an indication of inflation. Those white metals really thrive. And we were saying this in the gold bull market initiation in 2019. The white metals are going to lag because they need inflation in the market to really be the proof in the pudding before they take off and start to outperform gold. And lo and behold, that's exactly what's now occurring. So stay the course in your white metals.
Well, I think it's also important to notice that from the beginning of the decline last March, when the dollar index was 103, to today, I'm not even counting the bottom, but just to today, down around 11.5%. Gold in that same time frame to today is up 21.5%. If you look at low to high, like I said a minute ago, the dollar down 13.5% total from the low of March of 2020 to the high. Gold up over 43%. So you have this exponential growth in assets that tend to do well when people are looking for safe havens that you do want to make sure you're not missing out on. So if we're starting to see, with the dollar dropping this past week from 93.5 down to 91.5, Robert and I have been talking for a couple weeks that this is probably a dead cat bounce. We're probably going to have a push up to 93, 94, 95 on the dollar index, but there's no actual strength. There's nothing real or tangible actually pushing that dollar up right now. So this is a trading move up, and it is going to resume the bearish move. The dollar index is. When gold finds bottom, when the dollar finds top, and you expect to see it continue to decline, there's not as much gold as there are dollars. So those numbers are not going to be even. And I think a lot of people miss that sometimes, that a 10% drop in the dollar doesn't equate to a 10% rise in gold. In most cases, it could be a 20 or 30 or 40% rise.
Miles, it's a great point about the dollar, and you see the inverse correlation between the dollar and gold and why gold is such a great hedge against a weakening currency. But to me, all eyes need to be on the bond market right now because the long-term yields have plummeted, but in the short term, we've seen this spike, and that goes hand in hand again with the interest rates trying to be manipulated and inflation and an indication of inflation. And that could continue for a while, and that will put downward pressure on gold. It could keep us in this flat channel between the chance of you seeing a third bounce off of that support or even breaking through that support. So it's really going to be a matter of, do we see a dollar rally in the short term coinciding with a yield increase? That would be bearish for gold in the very short term. Ultimately, what we're talking about is a very bullish fundamental market that is going to be strong for many years. And again, a long-term store of value. It's why you don't do any short-term trading in the precious metals.
Right. And I think both the way I'm looking at it from the gold chart and the way you're looking at it from the treasury yield, I think we're both on the same page, right? When
For
you
sure.
say short term, we're talking a couple weeks.
Yeah, maybe a couple months, right? We could see continued gold price weakness. Who cares? I hope so. It gives more people an opportunity to step in at value.
Right. And there are going to be more opportunities down the road. There's going to be an opportunity at 1850, and there's going to be an opportunity at 2150, and there's probably going to be an opportunity at 2500 and maybe 3200. But I'd much rather take the opportunity at 1700 personally. So, all in all, we do a weekly show, and we're talking about the weekly market movements, but we're still looking at this as the whole forest, even though each show may be examining an individual tree. So, we are trying, on the grand scheme of things, seeing the whole painting for what we know it's going to be. Where do we find these entry and exit points on a week to week basis? How do we build a portfolio in precious metals that best takes advantage not just of dollar price, but of price relationship between different types of products, price relationship between different types of metals?
Miles, and that's exactly why we follow things like the Dow gold ratio as well, because you're constantly looking for value and opportunity, but the precious metals play an X% role of every portfolio from a savings standpoint, and you boost that when it's of great value and you've got situations where equities markets appear to be topping or they're in a manic melt up type of phase. And again, it could continue for a while because we've never seen such easy money. We've never seen such a volume of money. For us to have nearly $500 billion move into the stock market in the last 5 months and have that be more than the previous 12 years combined, again, uncharted waters, right?
So that's also why we're always encouraging our listeners to give one of the advisors at ICA a call, because not everybody's big picture looks the exact same. And you want to take time to sit down and work these details out as it pertains to your financial picture, your family, your future going forward.
Yeah, if you think the physical precious metals buying has slowed down, think again. We can personally speak from the standpoint of the physical precious metals markets not being this hot in 20 years, and quite honestly, stronger than the first quarter of 2020. Absorb that thought. So this time around, it's not knee-jerk reaction panic buying. It's not a fear-driven type of money moving over into physical metals. It's well thought out, pragmatic money, IRA accounts, people approaching it with the right mentality for the long term. And we've never been busier in our company's 49 years.
So that's going to do it this week for Golden Rule Radio. If you would like to discuss your personal portfolio with one of the advisors here at McIlvaney ICA, you can give us a call at 1-800-525-9556. You can find additional info on our website at mcilvaney.com. We can be found on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks for listening, and we'll see you next week.